Good morning, class 11th. This is our accountancy class. So, today we are going to discuss the basic terms of the accountancy, the basic terms which we used in the accountancy. Many of my students doesn't aware about the basic terms as they have joined the classes very late. So, first we are going to discuss the financial year. Financial year, or we can say the accounting year. The accounting year or the financial year is a period of 12 months for a business in which it prepares its books of accounts. Generally in India it starts from the 1st April and ends on the 31st March, or we can take it as 1st January to 31st December. There is no hard and fast rule of the 12 months we will take, but in India generally it is started from the 1st April to 31st March. So this is the period of the 12 months is known as the financial year or the accounting. Now next is the assets. What are the assets? Assets are anything in the business having a value which can provide future economic benefit in terms of money or money's wealth, right? So it is known as the assets. Assets, as I told you earlier, that assets can be further divided into two parts, that is the current assets and the non-current assets. Now, what are the current assets? All the short-term resources which are expected to be converted into the cash within a year, within a financial year. Like the cash is automatically in the form of the cash and the cash equivalent. Cash equivalent means marketable securities and the cash which we held in the bank accounts. So cash itself, number one. Number two, the marketable securities, and number three, the bank balance. Three altogether known as cash equivalents. Next is our inventory. Inventory means whatever the material, whatever the finished product we are having, this is called our inventory, because in the near future, in the very few months or days, it is going to be converted into cash. We will sell it out in the market and in return we will get the cash. So it will again be treated as the current assets. Now, like the accounts receivables or any prepaid expenses, the expenses which we did not avail the services but we have paid for that. So this is also the current assets. And what's about the non-current assets? Non-current assets are, yes, which are long-term resources like the land, building, plants and machineries, which cannot be exhausted within a year, which cannot be converted into the cash within a year. So it takes a lot of time to convert into the cash. It is a sort of permanent assets. It cannot be be converted into the cash again and again. So like our plant, like the building, do we every year change our building for the business, or even for the, do we every year change our houses? No. Likewise, the machineries, do we change the machineries on the regular basis? This month we will use this washing machine and the next month we will use the next washing machine. Do we do like in this manner? Never. So these are the permanent things, approximately permanent things which we are having in the business as well, like the plant, like the machinery, like the land. So it is known as the non-current assets. So assets are of two types, especially the current and the non-current. Current assets which we have to use within a year, or which can be converted into the cash within a financial year. And what is meant by the financial year? Just now we have discussed that the period of 12 months in India, it is followed by from April 1st to 31st March. So this is the financial year of 12 months from 1st April to 31st March. Now, In these 12 months, the asset which can be converted into the cash in these 12 months. So it is known as the current assets, and the non-current assets which is not be converted within a financial year into the cash. So here the difference is the conversion of the cash, conversion in the cash within a year or not within a year. So this is the difference between the current assets and the non-current assets. Now, the next is the liability. Liabilities are the obligations or the debt of the business which will result in the outflow of resources. Like if I have took the loan from the bank, so it is my liability because after some time, either for months it may be, either for years it may be, but I have to repay to the bank. Whatever the money with the interest, I will repay to the bank. So there will be the outflow of the money from my business. So that is the liability. So these are the obligations or the debt of a business which will result in the outflow of the resources. I have to send the resources back, whatever I have taken from the bank or from any person. So this is my liability. This is actually the business liability. Now, like we have discussed the assets in the form of current and the non-current. Current, which are converted into the cash within a year, and non-current, not in a year. So like that, the liabilities are also be categorized in the current liabilities and the non-current liabilities. So current liabilities, again, those we have to pay within a year, or non-current liabilities are those which we are not supposed to pay within within a financial year. Again, the financial year is the period of 12 months. So we discussed three things, that is the financial year means the period of 12 months. In India, it is from 1st April to 31st March. And second is the assets. Second is the assets. Assets are anything which is having a value and which can provide us the future benefit. If I'm having a pen, so it is also my asset in the business because I'm using it to earn the profit. So everything which provide me the benefit in the future, the economic benefit in the future, that is known as my asset. And again, the liability is the obligations or the debt which a business which results in an outflow of the resources from the business. Now, next term is accounting receivables. Now, what is receivables means? Receivable means which is about to receive very soon. This is known as the account receivable. So account receivable is the amount due for goods and services. When I sold, suppose I sold some good to anyone, like to Amandi, right? It is not necessary in the business that she will pay me the money then and there when I have sold the goods to her. It may be after 15 days, it may be after 1 month, or it may be after a week. So during this during this period, after 1 week or after 1 month, she is known as my creditor. So she is known as my debtor. So she have to pay me, right? She have to pay me the money back. So this is known as the receivable. Receivable. So account receivable is the account due for the goods or services sold or rendered but not yet paid by the customer or the client. The customer yet not paid, her money yet not paid to me. So she is my debtor, and this money which is about to receive, it is also my asset. So this is known as the account receivable. Now, one more type of asset is there, that is called the intangible asset. I know that you all are very much familiar with the word intangible. Intangible which cannot be touched and seen. That is known as the intangible. Like you have studied the product and services. The services are intangible and product is a tangible one. This is a basic difference, right? So like here, intangible assets are which cannot be seen and touched, like the goodwill. But it matters for the business. How my image is there in the society, it affects my business. Definitely it will affect. So we are having the value of the goodwill. So that is known as the intangible assets because we cannot see, we cannot touch the goodwill, what the goodwill is, how it look like. Is it having hands and arms? No. No physical appearance, no physical touch is there with the asset. So like the goodwill, trademarks, copyright, patents of the company, these all are the brand, these all are the intangible assets for the business. Now, next is the revenue. Now, the revenue is that amount which a company receives during a specific period in the normal course of business. If I'm having a manufacturing organization of a duster and I sell the duster in the market, whatever money I receive in return of this duster, this is known as my revenue. So dear students, just revise these concepts. So we will move for the further concepts, for the further terms in our next class. Thank you. Have a nice day.